Frank. We're back in the old spaceship.
Where do you even keep this thing when we're not using it?
Oh, don't worry about that. Just look out the window. Check it out.
It was nice of that UFO to give us the stock box.
I wish they weren't so scary when they gave it to us, but yeah, it's pretty cool.
And it's on a massive discount.
Along with everything else we sell, it's Black Friday. Looks like we just got a transmission from Julie at HQ. Huge sales store-wide happening all month long.
Okay, great. Can you put that away now? It's distracting me from my driving.
One of these days, we need to install autopilot because I seriously think we're lost.
Didn't we get lost last year?
We did, I thought we would remember how to get there this time.
Let's just keep traveling to different galaxies till we recognize it.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right. Good morning, guys. Welcome back to another live stream. Hope you're doing well. And, some good news. Some good news this morning out of the Middle East. At least let's hope for good news here. Oil moves lower despite a falling dollar as Israel and Lebanon agree to a ceasefire deal. This is great news. Just from a human standpoint, anytime you hear ceasefires or pauses on violence, etc., it is a positive thing. And we do see some major market moves in response to this. Guys, we've got stocks higher today. NASDAQ up almost 0.8%, actually gapped higher and continuing here this morning off of this news. So stocks loving this. Of course, peace in the Middle East to any capacity is an improvement. And that improvement is a positive thing for stocks because, of course, war and uncertainty makes the potential for oil prices to go higher, inflationary troubles, of course, just people just don't like the uncertainty of that sort of situation. And there you go. You got oil down 2.3%, gold dropping like a rock here, guys, down to 2641 here. And, gold selling off on a good thing, right? This is how this kind of goes. Gold, oil moving lower here today because good news in terms of geopolitical conflict is not necessarily good news for gold. Gold typically thrives on uncertainty and global, escalations and things like that. So we actually see gold down big today off of this good news. And again, that is the risk on assets moving higher here today. And then gold and oil, which are negatively impacted by less war, moving lower. So arguably moving lower on a good thing. So yeah, apparently a ceasefire has been agreed in the Middle East conflict, which is why gold is dropping. Yeah, it makes that's exactly right, and that makes good sense. So we see commodities here. Copper's up, of course, but most of the precious metals and store of wealth kind of ideas, as well as oil, lower on the day. So yeah, big news out of the Middle East. That is, like I said, a good thing in terms of the global market outlook, as well as just a good thing for in general. Dollar index is back below 107 here. Big turnaround story this morning here. So dollar index tried to get through these highs. In fact, it did temporarily close above highs. Closed right around 107.5 on Friday, now showing some signs of sort of a reversing course. I would sort of still give this bullish benefit of the doubt unless you start breaking through these lows. You start taking out those lows, then from a price action standpoint, you may have cracked this uptrend here that we've seen. And meanwhile, we also have Bitcoin, where we've been on 100K watch for a little bit here. Never quite made it to 100K, and turning back a little bit this morning here, still down 0.8%. Meanwhile, stocks higher, so a little bit of a divergence in those risk assets. But again, if we take a look here, just a 1 minute chart, I'm curious, moving lower as we get this good news out of the Middle East, which I think is interesting. Euro dollar here on the daily chart, showing some signs of a rebound with the weaker dollar this morning, right? So euro dollar up, pound dollar up a little bit, Kiwi dollar, everything getting a little bit of a relief push against the US dollar on the currency front. Dollar Swiss lower here this morning. And of course, dollar yen lower as well. So on the currency front, some dollar weakness giving other currencies a turn here, it seems. And then we have yields much lower here this morning. Take a look at the 2-year and the 10-year yield down here this morning. Of course, with geopolitical stuff, right? We've discussed this on the stream before, but there's generally a positive correlation between 10-year yield and oil. And it makes good sense, right? The oil prices, and this is something I'm referring to that, we studied in a recent live stream. Oil prices, they're not perfectly correlated, but rising oil prices can be inflationary. Falling in oil prices can be deflationary, or slow inflation. So when we look at the 10-year, right, 10-year yield down here off of the same reason that oil is down, it's the idea that, okay, well, if we have less uncertainty on the global front, less potential for war, oil prices are going to drop. And we see the 10-year yield also making a bit of a drop as well here today. Yeah, I mean, the oil price, in my view, thing to watch for on the daily chart would be, can we break this 67 level more decisively? We've come down and tested this area a few different times, but the question is for the sellers to start really making moves here into 2025. Let's see if oil prices can really get a move going. This may be a catalyst that helps us to get there. Falling oil prices in response to peace negotiations makes a lot of sense. If there's less likely chances of, attacks and violence and things like that, which can disrupt the supply of oil to the global markets, oil prices, the premium that is in them from that uncertainty kind of comes out, which means lower oil prices. Doesn't mean that we have to go lower. It just means right now that's what the market is sort of thinking. It's saying, oh, okay, if we're going to get peace, things are not so bad here. Maybe we actually do see oil prices go down. So again, I think from a technical perspective, you've got a downward trend here. You've got momentum here to the downside. The question, though, is whether or not we can actually take out those previous lows around that 68, 67 area. If we can take out those lows, momentum very much favors the bears. So back to gold here. Again, big drop for gold today. I remain really neutral on gold myself, but today, with geopolitical conflict and elections potentially being put behind us, I mean, this is too early to call, but if peace negotiations go well, that's a bearish thing for gold because gold thrives on uncertainty. The elections had a decisive winner. That is a bearish thing for gold. Gold would have drove higher if there was geopolitical uncertainty, right? Now, there are still reasons to be bullish on gold. And I always mention on my channel that on the long-term basis, I am a perma bull on gold. They print more money all the time in the US. It's a never-ending money printing, world, not just the US, but other central banks. Over time, fiat currency is losing value. I like gold more than I like dollars over the long term. But in the short term, gold looks a little rough, right? You've got a big sell-off here happening today, despite the big melt up that we saw, right? Some concerns about Ukraine and Russia. Now we see a little bit of that uncertainty getting taken out of the price of gold because you're getting potentially some peace negotiations happening in the Middle East. So to me, you combine that with a relatively robust U.S. economy, which is, of course, the largest and arguably most important economy of the world. We had PMIs on Friday, or Thursday, one of those days, which looked real good for the U.S. So you have relatively strong economic outlooks going forward. To me, that just means gold is not as interesting on the long side at this time. Now, I don't have a sell rating on gold right now on the Edge Finder. We're still getting a neutral reading, so I really don't have any trades. I don't love the price action either. This is not the same gold that we saw over here. If you're a regular stream viewer, we were very much watching the long side, staying long during this time. I missed this last bump, but most of this rally, I was able to catch a lot of the gold upside. And then I sort of got more neutral on gold. It continued to go on without me. And then now I remain neutral at where we currently sit. And in the grand scheme of things, we've actually just gone sideways for some time here. Back from the middle of September, we've actually gone sideways. We've had big moves up, big moves down, and sort of just netted to zero in terms of overall performance on the price of gold. So, if gold gives me a huge move lower, then yes, I will start to buy some for the long term. But that's not, a momentum trade that I'm able to take right now. There's nothing for me on gold at this time. I know a lot of traders who watch my streams are big gold traders and S&P traders and NASDAQ traders. I know everybody's got their thing that they watch. But for me, with gold at this moment, just going to stay kind of sidelined on it, stay cautious on it. If it takes out the highs and we have geopolitical conflict, something new comes up, right, then yeah, perhaps there's some momentum and I want to play that momentum. But at current levels, there's nothing for me to do. If price really corrects, guys, then yes, you might see more mean reversion, value play entries from me. But where we currently sit, not really interested. Same thing with silver. Silver dropping off a cliff here, down 3% today, trading around $30.42. Silver is one that I would love to own silver for the long term. If it does start to sell off, I may look to play some long-term buys on it, but nothing where we currently sit. And currently Edge Finder is giving us neutral reading for both silver and for gold. So current ratings, let's take a look at what we do have in terms of Edge Finder setups currently. S&P 500 is flirting with a bullish reading, but not quite there. DAX also close to a bullish reading, Aussie Kiwi, but only two bullish ratings right now, CAD Swiss, Aussie Swiss. Those are the only two that are currently giving us a bullish outlook on the Edge Finder. And for bearish setups, we've got Euro CAD, Pound CAD, Kiwi CAD, Euro Aussie, Kiwi Yen. So some currency pairs here really coming out in terms of setups. I want to also go back quickly to the dollar here for a moment. Before I do, let me also mention, we got 395 people here. If you're watching and enjoying the stream, can you do me a big favor? Hit the thumbs up button on the stream. I appreciate you guys who are tuned in here with me live. Whether you're watching on Twitter or YouTube or wherever you're watching, make sure to show some love. Heart the stream if you're on Twitter, and give it a thumbs up if you're on YouTube. Also, just a quick shout out, just a public service announcement. The Edge Finder is currently 45% off, but that is ending soon. This is your last call. Black Friday week is officially here. Our biggest discount of the entire year is right now. If you are someone who watches the stream on a regular basis, Don't let this week pass you without getting a copy of the Edge Finder. If you have intended on getting one for a while, if you've been holding your breath, waiting for a good deal, I'm going to tell you right now that this is the last chance, the biggest discount that we are doing on the Edge Finder all year long, 45% off. It's a one-time payment to get access to all of our data. And you guys ready for this? I'm so excited for this. This weekend, on the weekends, what I like to do is I like to work. And on the weekdays, I like to work. But I was working on something really cool. This is why I don't really think of, I work all the time, but it doesn't feel like work because I love what I do. But I was playing around with some data here, and this was awesome. I was able to get us built here the historical retail sentiment tab. This is something that we've had people asking us for a long time. But I want to show you this because I think it is absolutely fascinating. Retail sentiment is a really fascinating topic because what we're able to look at through the Edge Finder's new retail sentiment history. And by the way, if you have the Edge Finder already, check it out. You got that tab on your Edge Finder already. It's just been made public for users this morning. So Edge Finder has retail sentiment history, and this shows us over time. Also inspired by Forex James, who's in the chat right now. I saw him talking about it, and I saw him using another service that had retail sentiment history. And I said, no, James, you're an Edge Finder user. You like retail sentiment. We're going to earn your usership on this. And I know James he's laughing right now because he's already a Edge Finder user. But I saw him using another tool for this feature, and I said, nope, we are going to do that now. We are going to offer that. We're the most competitive in the industry for this stuff. We're building data for the average trader at home to use on their screen. So check this out. Retail sentiment is cool, but we've only recently changed it so that you can see, okay, here's retail sentiment overall currently. And this is important, right? You want the current retail sentiment, but you also want to be able to look at the historical retail sentiment. And what I think is fascinating here about euro dollar as an example is that we've seen euro dollar's price. The white line is price over time. And I thought that was important to include in our retail sentiment tab. We've got price going down, right? Everybody knows euro dollar's been tanking recently, but look at this. I built this net retail positioning, which takes the long percentage minus the short percentage. And you can actually see, look at this. Retail has been building a long position, right? This is a daily snapshot that the Edge Finder captures and puts on this screen for you. So we've got retail sentiment getting more and more long. And what is price doing? Going more and more short. I happen to know that James, who is in the stream and a regular stream viewer, he knows I'm coming at him with this right now because we know you use another product for this, but we made it better so that you use our product. That's we got to earn such a established traders business every day, it seems. But check this out. So we added a chart where you can actually see the price of euro dollar over time, but you can also see the net positioning over time of this instrument in terms of a retail positioning. This second table down here shows you the long to short percentage rate over time. And you can actually see, this is interesting. So as price has been going down recently, retail traders are piling on longs on euro dollar, and it's not going well because euro dollar has been tanking. You can see in the price. But we find that interesting because with everybody on one side of the boat, everybody is trying to buy this dip and the dip keeps dipping. Momentum traders out there, like James, who I know is DCAing into euro dollar shorts, has been making some great money just riding that downward trend. And it's based on data, right? So this new retail sentiment, I'm really excited for this new tool. This is something that we've had a lot of people requesting for this tool, and we finally got it ready and built for members. If you already have the Edge Finder, it's under the Retail Sentiment History tab under Sentiment and Positioning. If you don't have the Edge Finder, what are you waiting for? Today is literally the best day of the entire year. We're doing 45% off the Edge Finder this week for Black Friday, so don't miss the opportunity. If you'd like some information about getting that sale, we'll drop the link here in the chat. You can speak directly to a member of our support team and get your copy today for the biggest sale of the year. Black Friday is officially live. It's always fun to kick it off and to have a lot of conversations with customers. So yeah, we'll have that link here in the chat in just a second here for you to send a direct message to our support team so that they can get you hooked up with that discount and get you set up with a copy of the Edge Finder. There it is. Cool. All right. Yeah. So anyways, I want to show you something about that. So when we just looked at euro dollar, right? We talked about euro dollars in free fall. And it can be tempting when you look at this to say, look, euro dollar is in a downtrend, or it's sold off a lot, and I want to buy this thing because it's gonna go back up, right? That's the theory that a lot of times gets traders in a lot of trouble, because it does not have to go up. Just because it's been going down for a while does not mean it's time to now go up, right? Uh, there are such things as getting oversold, overbought, but trying to call that is incredibly difficult. And again, going back to our sentiment tab, traders are inherently very bad at picking when the market is actually going to turn. You can see retail traders throughout this entire downward trend that we've seen for months now. Retail traders have been piling on longs. They've been holding on to the bag, right? As they say it in trading land. This thing's been trending down, trending down, trending down. Meanwhile, retail traders are buying, buying, buying. And it's, of course, a very losing approach to just be buying this downward trend. So how can you use that as a trader? How can you use this data piece as a trader? I'll tell you what I look for. If I see everybody is piled on to the long side on the retail trading front, I'm going to continue to look for primarily short side action, right? I'm going to go with the momentum of the market and go against where I see retail traders piling up. If that theory makes sense to you, type yes in the chat. I want to make sure I explain that okay. Does this data make sense? Or is the point being made okay? If you see everybody piled on one side of the trade, we want to make sure to be careful about that. It doesn't mean that the crowd can't be right. Like eventually euro dollar will bottom out, but trying to time it is incredibly difficult. And I think I'll tell you this, guys, I think this might actually be an interesting indicator too. You want to know when retail traders, you want to know when I actually think euro dollar is going to bottom out in terms of a retail positioning thing. You might see where I'm going with this. When this thing actually starts to shoot up and retail traders go the other way, you might have actually found the bottom for euro dollar, right? So if we actually see retail traders flip bearish, meaning they now think euro dollar is going to go lower, it's a same old story. If you start to see this, guess what's going to happen? Retail traders are going to start going short, and then we could potentially see a new trend, and they're going to be on the wrong side again. This is why, one of the big reasons that retail traders lose money is they bet against trends and they refuse to be wrong until it blows their account. So re-engineering this thought process is something that we're trying to do within the Edge Finder. So again, don't miss that offer. It is 45% off. It is a one-time fee. You get access to the commitment of traders data, retail sentiment data, put to call ratio. We got more data in one place than NVIDIA warehouses. Just kidding. Nobody has more data than NVIDIA, but you get my point. You got a lot of market data in one spot to make things easier on you as an analyst, as a trader, and that is why we're in business. We build tools for traders. NASDAQ's up 1% today. Loving the idea, of course, that if you're going to get peace in the Middle East, or at least negotiations that are improving, gold prices are going to sell. S&P 500 is going to move higher, right? Oil price is also down here today. Although interestingly, Bitcoin moving lower here today. A little bit of a sentiment play here, though. This is tricky because everybody thinks it's going to 100K. Me too. I think it's probably going to go test 100K. But you may get a little bit of a sell-off before then. Frank and I were speculating that a lot of people might have their orders to sell Bitcoin right around the 99.5, 99,000 level. And what this might be doing is that, and I hate to sound like a Wall Street Bets Redditor, but it might be the paper hands getting taken out, right? The weak hands. These are whether you're a Redditor, whether you're these things have gone on for 1,000 years, right? The trading psychology stuff. The weak hands, quote unquote, paper hands, whatever you want to call them, people are just the easier people to take out are taking their profits. They're getting out of the way. And then people who truly hold may see, and again, this is not a guarantee. There's never a guarantee in markets, but I think there's a high probability you're going to get some weakness that gets taken out here this morning. And then I think we could still see 100K on Bitcoin. Now, I'm saying that I think that I'm just some random idiot on the YouTube or Twitter that you're watching. I could be totally wrong. None of this is financial advice. Do your own thing. Bitcoin could have just topped for the next 5 years. Who knows? But for me as a momentum trader, I don't know where markets are going with certainty, and I never claim to know. What I like to do is use market structure to tell me when it's time to get out of a position. So I went long Bitcoin around $70,000. And I have a stop loss that is below this 92,500 level. If that level cannot hold and we start breaking through there, I'm going to go ahead and call it good on my Bitcoin play. It's been a really, really good position for me, but I'm willing to give back those profits if the market, chooses to truly reverse. That being said, if this market kind of finds a higher low and keeps going higher, the reason I'm not taking profits is because I want to trail that stop. I want to, if we get a higher low, I want to be able to continue to stay in this play because I don't know how far Bitcoin goes. It could go to 120,000. It could go to 200,000. It could also go to zero. I don't know, and I don't need to know in order to make money, right? What I think a lot of traders look for in social media is they look for somebody who claims they do know. And that's why that stuff sells really well. But the reality is great traders don't have to know what markets are going to do next to make money. You just position size appropriately. You trail stops or you manage your position. Some of you guys might like taking partial profits. But the bigger thing, there's only one thing that you can really, truly control in the financial markets. You ready for it? It's your own personal position sizing. That's the only thing you can control about your trading activity. Of course, there's also, you got to manage your trading psychology, et cetera. But in terms of actual P&L movements, the only thing you can actually control in financial markets with certainty is your position sizing. How much money do you put at risk? That's what you can control. So think about that. Think about that the next time you're taking positions. How much risk are you willing to take? And what happens if you're dead wrong? Because sometimes I'm dead wrong, but I don't let it crush me when I'm dead wrong. And that's the difference between, I think, people who, the difference between professional traders and people who don't make money or they lose money in the markets is simply position sizing and sticking to a system that has a higher probability of making money than losing money over the long term. Even great trading strategies can have terrible drawdowns, losing months, losing years, right? It is possible for losing strategies to have down years. I had a negative year in 2022 and it sucked, but it's part of the game. Nothing works forever, and that's why trading is difficult. Nothing works all the time, right? Everything has weaknesses, right? It's just like any boss you play against in a video game. They always have a weakness, right? It's the same thing with trading. Every strategy has a weakness, has a period of time where it sucks. It's just part of it. Anyways, guys, we're going to bring in Ivan here in just a second to the conversation to see what he's got to say about everything going on, Middle Eastern stuff and everything else. But before we do that, let me just remind you, remember our 45% off sale. This is your last call for Black Friday week. 45% off the Edge Finder. You get 45% off the VIP memberships. Everything is mega discounted this week only. Do not miss it. It is the best chance of the entire year to get low costs on the Edge Finder, to get access to the brand new stock box, get access to our VIP group, and so much more. Stay tuned. We got Ivan coming in to the show in just a moment, right after this. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, and we're back with Ivan from Ivan FX, the YouTube channel that you all know and love. He's on every week. Good to see you, Ivan. How are you?
I'm good. And you?
I'm good, and some good news out of the Middle East today. Some negotiations may be going well between Israel and Hezbollah. So, what are your thoughts on this? You've got oil prices down, you've got silver prices down 3%, gold down 2.7, and stock market, of course, ripping off of this as it is. Like I said, it's good news.
Is it good news or is it bad news? It's all relative, you know. Depends if
I
you're
would say
buying
for
oil. This
most
is a
people,
bad
it's good
story.
news.
If you bought oil, this is a bad story, right? If you bought gold, this is a bad story. Everything is relative. Nada. I'm just joking with you. Nah, it's good. It's good. It's good.
Yeah, no, you're right. There's always a winner and loser on every piece of news, but in terms of just a humanitarian perspective, definitely good news. In terms of price of gold, price of silver and oil, maybe not so much. And this takes another thing. I want to talk gold here just for a second with you, Ivan. So this takes one more thing away from gold, right? You had the post-election concerns be taken away, and now you have a little bit of the geopolitical news taken away. You still have Ukraine and Russia and those uncertainties, but does this hurt the story for gold? Is I don't know, do you have a bias one way or the other on gold at this time?
I just had a lecture for like 20 minutes in the VIP webinar about gold. So, am I going to do that again? I don't know. Yes, I'm definitely trying to get you cancelled, Nick. But hashtag Forex Games. My story for gold, it's a bit shaken. Because of so I was bullish, and then I saw the fall. I'm like, okay, we're technically bearish now, and then we have risen for some time. But then we never met a new high. We just met a resistance high at 27.20. So I'm like, is that everything?
Yeah, I mean, in terms of a technical basis, failed to take out that 27.15, let's call it 27.20 level, and now heading back lower. I mean, in terms of a price action basis, I mentioned this earlier. We're in this beautiful upward trend on gold. Then we kind of failed that upward trend. And now with a potential lower high coming in here, depending on what happens next, if we take out those lows, gold straight up looks bearish if we take out those lows, in my personal opinion.
Yeah. Okay, I'm going to give you a serious answer. My story isn't changed. The story hasn't changed yet so far. It's just that I want to be a bit more cautious, I think. Given the volatility. But then also, where's the manipulation? Is this new information gonna drop gold as in now risk is over? Is that the story? Or is it the story that this is just a short-term pullback because we didn't have really a great reversal at 2,500, and then this is just another setup to buy again, just needs a pullback?
Yeah, and so we'll continue to monitor that with gold prices where they are. They're still relatively high, right? You've had a really good year for gold. There's still some uncertainty baked into this, still expectations for rate cuts to a degree, but I kind of feel like the expectations for rate cuts, at least right now, slowing are a bearish catalyst for gold until further notice. I mean, you really see yields are down today, of course, with this news, but generally speaking, yields are up and away. You've had a little bit of a drop here today off of the Middle Eastern resolution stuff. But the bigger question is, with the strengthening dollar that we've seen, is the dollar truly going to top here? That's the question for gold. Is if you get the dollar index topping out around 107, and while we've seen European PMIs and UK PMIs that came in real weak last week, you probably need to see some material weakening on the US economy before you can really get, in my opinion, super bullish on gold. What do you think about the dollar?
Okay, I'm just going to remove my electronics. didn't you say last week we're supposed to drop or something?
I
Because
thought we were
you said
gonna.
like, it's gonna go lower from here.
I thought 107 would give more resistance, but with the PMI data that came out, US dollar just kept going. It was European, UK PMIs just kept the dollar train going. But I don't have a bearish outlook on dollar. If anything, I lean more bullish. But I did think we'd get a little bit more of a pullback here, and it doesn't seem like we've gotten much yet.
I'll give you a serious answer. I believe now that we technically or tactically should have a pullback until December. So this week should be a pullback week. Just that we can get some kind of discount for December. Other than that, the trend is still so far still intact. But what I don't like, I might be wrong and I might be right about it, is this candle. This 9 a.m. candle on Friday. The exhaustion in that one going up to 108 something shows to me, at least, that we might head down for a moment. That's kind of like a last hurrah in my book. So we'll see if that actually materializes. So I've said to the group that I think we're going to have some dollar falling given the technical exhaustion, but the overall is still higher. So you might be a bit careful, because the question I asked and I want to ask everyone is this the start of the bullish trend?
Yeah, and in terms of what you just said about the fundamentals, you have the dollar index still looking good, but I wanted to draw this chart to show this to everybody too. What I've been just saying here is you can still have, even in a very strong upward trend, a very healthy pullback, and that pullback for the dollar index could go far, far, far down in terms of a percentage basis. Maybe 104, 105 is perfectly reasonable to see prices go to and still be in a relative strong upward trend. So, with when we talk about charts that are moving in kind of one direction, you do have to be careful about chasing this kind of idea. It definitely could continue, but your risk to reward starts looking a little less attractive in my view, as opposed to if you can get that pullback, if you can get a discount in terms of dollar, there may be some better opportunities risk to reward basis wise. You might miss the move if it just keeps ripping. Yeah, you might miss it, but I'd rather miss moves and only take ones that truly have better potential in terms of a risk to reward basis. Speaking of moves, if you had any dollar ideas, Ivan, which charts would you be looking at? Euro, pound, Kiwi? Are you looking at any of them?
We had a little bit of a fun story earlier in the meeting, and I said that, okay, so let's say that your dollar's going to go higher then, and I didn't say that, but I'll probably take your dollar. How far of a pullback will you get before it turns bullish? And this is different levels. So my fair answer, or my slow answer, is euro dollar. And the reasoning is euro strengthens the most when dollar is weak, if dollar is supposed to be weakening, but in itself, euro is weak. Other assets also the same thing. So in that essence, I'll probably do euro dollar. The other one is Australian dollar, New Zealand dollar, which has gone into a range. So I don't really like it. So, but it still has like a higher low sort of tried situation. But anyways, yeah.
Yeah, no, I mean, the Australian dollar has been getting absolutely beaten up against the US. I mean, most currencies have been. The question will now be whether or not you can start to see some actual breakouts, which could lead to, short term, like we're talking about, short term, bigger pullbacks on the dollar index during this period of time. That could be a month-long trading environment, right? So if it takes its time here, there's 30 days. You've got the holidays here for the US mixed in there. It's very possible that you could still have a strong dollar trend continue, but get a few weeks of short-term bearishness. Again, that's not really something that I personally like to play or that I'm actually looking for. But I think it's completely reasonable to see something like that in the meantime, and then still look for opportunities on the long side if the fundamentals still make sense at the time.
Okay, I agree. I can agree with you. I'm just looking at dollar yen, and I don't know why I have made this chart, and trying to find in my brain why I made this chart. But I seem to be quite somehow right about it. And I bet I haven't made this as this happened. It has to be like last week, like Monday or so. So I think I made this chart about here, and this is going to happen afterwards. So maybe if yen is strongest today, seems like maybe that's the best dollar yen play. But Craxer, how old is Nick? He's a baby.
I'm 16. 16 months.
Barely legal.
Yeah, no, I mean, if we take a look at the yen, dollar yen, pound yen, euro yen, all seeing a little bit of give back here in the last few weeks. But the question is too with the Japanese yen, we always come back to it, is like, what's the global situation in terms of global outlook? You saw a little bit of PMIs out of Europe come in weak. So euro yen, especially here, pound yen, these ones, I mean, the UK also had weak retail sales. So pound yen taking on a little bit of water here against Japanese yen. But the bigger question is, what does the macro situation globally look like? Because that's the thing about the Japanese yen. The Japanese yen is very much sensitive to the whole world's economy because of its role as the piggy bank, if you will, for a lot of hedge funds and borrowers, right? So what a lot of funds do, it's known as the carry trade, is a lot of funds will go borrow, aka sell Japanese yen in order to fund their ventures in other places, whether that be stocks, whether that be bonds, whether it be other currencies. And by the way, if you need to go buy, if you want to, let's say you're a hedge fund and you want to make a return. So what you do is you say, I need to borrow money. Well, the Japanese yen is going to cost me very little money to borrow that money. So I go sell that. And with the money I borrow from the Bank of Japan, what do I go do? Well, let's say I go over to let's say I want to buy bonds. Let's just say I want to buy US bonds. And here's a scenario. You want to buy US bonds? Okay, what do you buy US bonds in? US dollars. So you actually need US dollars, and then you can go buy US bonds or stocks or whatever. But the point is, where did this come from? Well, it said we need to sell Japanese yen, buy dollar, and that's the scenario. But the caveat here is that whole trade reverses course if things get ugly in the world. So what happens is, instead, if things are ugly, you own bonds and you say, oh, I need to get cash because I don't know what's coming next. And so the trade reverses and everybody goes long yen. So that's why it's global, because you could also do this for UK bonds. You could buy German bonds. You could buy German stocks. You could buy UK stocks. You basically, it's the world's piggy bank is the Japanese yen. And that is why we always keep an eye on the global situation if you're going to try and value the Japanese yen. So inherently tricky, but the pound yen, euro yen dropping here recently makes a lot of sense with the recent weak PMI data out of Europe.
But does the strengthening at the moment make sense?
Wait, sorry, say that again.
Does the strengthening of the Japanese at the moment, given the ceasefire, I bet that's the driver at the moment. But why is then yen becoming stronger at the moment, as we can see here, rising a bit? And dollar did kind of fall, but it's kind of trying to make a pullback.
Yeah, no,
shouldn't it weaken the yen?
That's a good point. It could be a little bit of spillover from last week's trading, but also we see stocks reversing course here this morning. So a bit of a risk-off sentiment flip. You got NASDAQ here, what was up 1%, now only up 0.2%. S&P 500 also looking similar. So you're seeing a little bit of a risk-off flow here, at least in the opening bell of the U.S. stock exchange. Same thing with dollar. Dollar sold off. It is now rebounding a little bit. And Japanese yen sort of reversing course as well. So interestingly, We also see bonds still remain elevated. So not exactly sure what that's. Well, oil, let's see what oil's done. Oil's still down. Gold is still down. Bit of a weird day, Ivan. That seems a little contradictory.
I did say that for a reason.
What you got for us?
Yeah, do I got something for you? Also, my brain, well, the only thing that can kind of make it make sense is the fact that that's not a story that drives yen at the moment. It's not necessarily the greatest story for yen, and there is bigger fishes to take or catch, which is the interest rate expectations or differences. It's the election. Well, still election kind of days, so we call it in English, days, like the spillover from the election and other reasons. Why would yen strengthen today because of that? It might be because people have, I don't know, for some reason taken their money outside of Japan and then bring them back home. I was just looking into their what do you call them in English? Their statistics, and they're still with inflation at 2.3. But it's less than last time, and their growth is 0.3. So lack of growth, but still has inflation above 2% target. So it's kind of like, I don't know, zero growth or a lack of growth, but still has inflation. So when are they actually going to increase interest rates? Maybe this lack of a war now brings the interest rate expectations rate hike back into Japan. Sorry, that was a long word.
No, I was kind of thinking something along those lines. I was wondering how the drop in oil prices could impact global rates. If you think about this, if you think a drop in oil, that doesn't just help US, right? That helps everybody. If oil prices do actually have a material move down, then other central banks and the US may look towards cutting rates more because they have less inflation to worry about. And that means the Japanese yen could theoretically look stronger on a relative basis. So there's one concept. But yeah, I mean, a bit of a divergence here. Stocks.
Sorry.
No, it's just a bit. Sometimes you just get weird market moves. I mean, I think that the oil prices are a big catalyst here today. Look at this. Russell definitely telling you something. You've got 1.6% up on the Russell, and the Russell is small caps. Small caps, small companies in the United States are very sensitive to what interest rates do. We see a clear, decisive move in interest rates today. Yields are dropping hard. That is telling you that, again, people are thinking, the situation in the Middle East potentially resolving itself a little bit is good for inflation outlook. Good inflation outlook is not necessarily great for everything, but it's great for small caps, right? It's good for et cetera. And why is gold down on that? Well, because gold was also priced high because of the risk premium, the uncertainty with the Middle Eastern stuff. So again, we'll see. But the most clear moves that I see, the most obvious moves that I see here today are oil prices lower, yields coming down because inflation expectations are going to diminish a little bit.
I don't know if you said it. I might have blocked out that, but who doesn't benefit from oil falling is Saudi Arabia, or any that has income in oil.
Right.
But Saudi Arabia is funding their government spending with oil, so that's very important.
Yeah, no, really important. And with oil prices where they are down at 70 for WTI, and for UK, I think it's probably like 73, right? 73. You have Brent crude and WTI both down here on the day. That does negatively impact certain areas. It also, I'm curious, just out of top of mind, if this is doing anything to energy stocks. Energy stocks down a little bit here today, but not nearly as much as the actual spot price of oil. So VIX also down 4% almost today. So volatility expectations going down due to the I mean, look at that. Look at silver here today. Gold is just free falling right now. I don't know. It's a lot of people are going to probably look at this and say, "Is this a dip to be bought on gold?" And I can't speak for you, Ivan, but I'm going to make a guess that you and I are both kind of just saying, "Nah, that's when you probably stay on the sidelines of."
How many knives do you have in the cabinet?
Just a couple.
Just a couple.
I've caught too many of them. They're all stuck in my arm. Yeah.
Let's change of topics. Anthony says Trump plans to boost U.S. oil. Will that make oil higher? No, it will make oil lower because it's will increase supply. More oil, lower price.
I see so many bearish catalysts for oil going into next year, Ivan. I think actually you and I both had that on our forecast sheet for next year. We both were thinking bearish oil prices. You have a number of catalysts. Let's hope for peace. Peace is a bearish catalyst for oil. Let's hope for. Go ahead.
Nah, I was just trying to remember. Yeah, it was bearish.
Yeah. So I mean, I would not be surprised if oil prices are high 50s to mid 60s next year by end of year. I would not be surprised by that at all. Oil prices, when you see these ginormous moves on oil, it's almost always geopolitical stuff. And, if we take a look at my screen here for a second, oil prices went from in 2020 down like 12 to 129. That is a massive, massive range on the price of oil. But it's just a very, very volatile asset in general. And if there is something that changes that we can't possibly see coming, like if there's some big breakout in Taiwan and China, if that happens, right? I can't tell you when that's going to happen. I don't know if it's going to happen. But if that does happen, then we have to adjust. And that's the thing about forecasts. We did this funny sheet where we put out our forecast for 2025. And I say funny because nobody truly knows what's going to come down the pipeline for next year. But given what we currently know, the trend to the downside in oil prices seems reasonable to me. And not much gains on gold next year also sort of makes sense to me right now. I don't see another 30% up year for gold unless something changes, unless some big catalyst comes along, in which case I'll revise my theory.
So yeah, it's based upon current view, what we currently know, nothing more than that. And things can change. It can be another war, there can be a lot more peace. There's a lot of moving stones.
Yes, it's impossible to call the future perfectly. But given our current situation, lower oil prices seem reasonable for 2025, given the current setup. So we'll have to see.
Can we talk about this one for a second?
Yes. What do we got here?
Because this is the probabilities of what we're going to do for the Fed meeting 18th of December, which is in about, 2-3 weeks. And Mark has gone from, we're going to cut 4 times until we're just maybe going to cut.
Very interesting.
One more?
Yeah. I mean, with that in mind, we were at one point like almost certain going to see another cut in December. And now we're practically at 55-45, which is a very big change up to markets. And I think that one risk I see to markets going into 2025 is how are markets, and when I say markets, what I'm talking about is gold, stocks, specifically those two things. How are they going to react if we come to the conclusion that rate cuts in the United States are really not going to come nearly as fast as previously expected? I think that if the U.S. economy continues to chug along as it has been doing, rate cuts next year seem sort of not necessary until they are. But for now, they don't seem super necessary. Economy's not falling apart. Stock markets are at all-time highs. What gives?
Yeah, and I think what has really surprised most people, I'm on the wrong one. What has really surprised most people, I think, it has been the strength of the economy. And you can talk about the for a long time and all those things, but I think that it came down from very far. Was it 9% or so inflation, and then down to 3, and then it kind of stopped, and now it's 2.5, but everything else has kind of gone up again. So the U.S. economy has shown an incredible resilience, an incredible kind of fight back to, not necessarily to life even, but fighting for its life in such a way that so little, given the changes in inflation, so few people has lost their jobs. Though it's been completely different from what it was in 2022, where everything that control was given 100K or more a salary when they were coming out of college. But it's not the same market anymore. But still, people have, generally speaking, kept their job, and that's remarkable, and that's kind of what has surprised the market. So what generally tends to happen, a year ago, I think we were pricing in 6 rate cuts by now, and the result has been 3 cuts so far. So maybe 4.
Yeah, well, right, exactly. 75 basis points. So we'll see. I don't know. It's going to be an interesting month next month just to see what the Fed chooses to do. I mean, if you continue, we have a jobs report between now and then, and we get a CPI report, I believe, between now and then. So we have a lot of data that could really swing one way or the other. That probability could jump one way or the other, but it being 50-50 right now tells you a lot about the shakeup in market sentiment in the last few weeks.
But I'm building you up. This is why NFP and CPI will be, or the US CPI on the 13th will be so important. We are 50-50. That's what it lands on.
That's a great point. Making those two events, guys, next month, incredibly highly potential volatility. So, and this is why we do fundamentals, Ivan. You know, if you're just a technical trader, you see a red folder, you say, oh, it could move a lot. But what we just discussed tells you those things can move a lot. Those are highly anticipated figures because of how close the calls are. Anyways, Ivan, we're out of time. We gotta give over the show to our next guest. Forex James, take it over. Before we do that, let me just mention to everybody watching, if you guys are not already following Ivan on his own YouTube channel, he's got his channel linked here in the chat right now. Make sure to go subscribe to Ivan FX on YouTube. You can find him there. Just search him up, Ivan FX, or click the link in the chat. And if you guys are interested in one-on-one coaching, he does offer that. You can find that if you're a member of our Discord, send him a DM. Ivan is in the group. And if you're not in our Discord, what are you doing? You can join it for free and send Ivan a message there. Or you can find him on his YouTube channel and send him a direct message through one of his social links. Ivan, thanks for coming on.
Thank you very much for having me.
All right. Hello. See you next time. And now, guys, again, like I said, James is taking over the show here, coming on for a little bit to talk some more markets with you guys. Forex James, one of our favorite contributors here on the A1 Trading Show each day. So stay tuned. We'll be right back with James just after this quick break.
This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The Stock Box, the Edge Finder, Pulver Alerts, and the VIP Discord community, as well as our Trading View indicators, are all on sale for 40% off. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more with the link being dropped in the chat now. Again, 40% won't last forever, so take advantage of this huge sale. Stockbox, Edge Finder, Pulver Alerts, VIP Discord community, and Trading View indicators, 40% off right now.
Hello. How's everyone doing? Hope you're all having a great start to the week. Hope you all had good weekends as well. So, updates on the portfolios, what I like to do when I come on stream, first of all, so you know that, I know what I'm talking about. and I have the right to tell you certain things about the markets. So currently in a very, very good month. So you can see here we're up almost 5%, with some trades currently open, which I'll go through in a second. So yeah, not looking too bad. We're up almost 10% in the first sort of 3 months of this portfolio being alive, which, yeah, quite impressive if I do say so myself. So I've just entered into Euro CAD short, and I'm going to tell you why in a minute. But first, I want to see if any of you can tell me why I might be short on Euro CAD. And while I do that, I'll show you some of the other positions. So I took a gold long this morning, closed out right before the drop because I coded the algo. I know exactly what's going to happen at all times. Obviously, it definitely wasn't just a great exit. So this was about 0.5% gain this morning, which was quite nice. Obviously, short EuroCAD here, got some DCA positions open. And most importantly, still DCAing euro dollar to the short side. So you can see here, I've currently got about 1.5 lots on, which is not too bad in terms of risk or exposure. Just really looking for a fill of this gap. Nothing too crazy on this one. So if I turn on my trade history, you can see I've been DCAing euro dollar for quite some time now. And this is possibly my final attempt until further notice. And I'll go over euro dollar as well in a second. So as for euro CAD, it's pretty obvious to anyone that has the Edge Finder why I'm short, and that's because it's currently the most bearish reading. You can see here it's got a score of 7. The data is very supportive. We've got COT short, we've got retail traders very long, actually 76% long on Euro CAD, which is a nice sign. You know, we like to counter trade the idiots. So yeah, that's essentially it. Obviously entered off our fib zone. This is the way that I tell you guys I trade almost all the time. So it's a very straightforward sort of bread and butter position. Do you use an algo for your trades? Nope. I don't trust my money with anyone but me. Hi, James. Please touch on why the market opened with a gap. It just did. It's just one of those things. So with gaps in the FX markets, it's not very uncommon, or it is quite common, that you'll have market gaps and market opens. The problem is, or not the problem, that's probably the wrong word. The thing is, you'll see this very similar thing with stocks. Now, I don't trade stocks very much, if at all, really. But what I've noticed with stocks is gaps can stay open for long periods of time, weeks, maybe even months. Whereas with FX, you often see these gaps get filled relatively quickly. It could be within a couple of minutes, could be within a couple of hours, or even a couple of days, but they do generally get filled. I actually challenge you to go back in the FX markets and find a gap that hasn't been filled. So that's one of the contributors to going short on euro dollar. But as for why the gap happened, wouldn't overthink it really. It's just one of those things. So let's see, the dollar currently, well, briefly broke above 107. It's not managed to hold, which is a little bit disappointing, to be quite honest, but there you go. It's not a surprise that we are seeing some sellers in this market, possibly just profit taking and sort of a natural market pullback before we continue higher. What indicator do you use? The indicators I see on your screen are great, especially the gold one. Yeah, so the one on TradingView is basically just a bad version of this one on MetaTrader. It's a custom coded one. It's my own. But it's just pivot points, which are these red lines and the green lines. This oscillator at the bottom is just a momentum oscillator. It's very similar to an RSI or, you know, stochastics, whatever. And I also get these entry signals as well based on my own entry criteria. So yeah, the one you see on here is exactly the same thing. It's just a bit worse. I just basically recoded it for TradingView just so I could have the pivot points. Bro, can you check on GPCHF? Why is it falling? Sure. I'm not really sure why, to be honest. We can have a look though. It's not really falling, is it? Well, it's just falling, but it's not really a huge thing. So essentially we've got quite an impulsive move over here to the left. So again, similar to market gaps, you can kind of expect these moves to be corrected as well. I say this all the time about news moves. So you know, over here we had the same thing that was corrected. Over here hasn't fully been corrected either, actually. But yeah, I wouldn't really think it's anything hugely important as to why this is getting corrected. Oh, I'm also short Swiss yen. So if we zoom out here, this is essentially it's not my trade, really. This is piggybacking off Morgan Stanley. So they're in actually, let me get rid of my position. So this is Morgan Stanley's position here. You can see that where they executed is right here. It's exactly the same. So I've basically just followed. My interest a little bit lower, but there you go. What can you do? So that's that. I'm kind of anticipating the MOF intervention that should be coming quite soon. In theory, obviously, I don't really know for a fact, but it wouldn't be a surprise. Why is gold down? Gold is down because there's a bit of a relief with is it Israel and Lebanon, I think. It's sort of like a ceasefire talks, which is obviously driving some capital outflow from risk assets such as gold. Please check pound yen and euro pound for sure. Do you know M Stanley Trade _? No, Sean, I've never heard of him or her. So pound yen, let's have a look. So last week with the yen pairs, it's essentially stayed the same. So I did call a short on pound yen back up here. I didn't take it because it wasn't really in line with the way I actually trade, but it was on my watch list. The problem I've got with the yen pairs is the intervention. Now, I'm going to sound like a broken record to anyone that's been watches my segments often. I've been talking about this on repeat really recently. But what we've got with the yen, we had a strong appreciation after the intervention caused the unwinding of carry trades, flash crash. We had a temporarily hawkish BOJ or Bank of Japan. And since then, nothing's really happened. And that was mainly driven by the Bank of Japan saying they're not in an environment to cut rates, to hike rates. So since then, we just saw that it sort of bleed out. It's just been on this move to the downside. Now, what we've seen is almost a full correction. We're almost back at the pre-intervention level from July. This was, July the 10th. So it wouldn't be a surprise that, if we do get another intervention, just to slow down the depreciation yet again. We've also had word from the MOF that they do need to intervene. It's not a secret, really. So I would heavily avoid going long on yen pairs at this moment. But of course, that's just my thoughts. You can do as you please. Do you know about Morgan Stanley trade? How do you know? Oh, how do I know? Okay, well, it's from bank reports. So I'll show you. I can't remember where the exact report was, but let me show you. So, for example, I get reports like this every day or every weekday. So Monday through Friday, I get about 10 to 20 reports from places like Bank of America, Morgan Stanley, Credit Agricole, etc., etc. And in those, they often list what positions they're in. So it makes it quite easy, really. EJ sell setup on this retest. Let's have a look. Retest of what? Oh, do you mean this sort of break and retest through here? I guess that makes sense. I don't mind that position. Okay, so let's have a think here. Euro dollar, it's in a tricky space, and I probably wouldn't be in the position I'm in right now in terms of going short if we didn't have this market gap. Because we've got the market gap, I'm happy to keep holding because I am very sure it will get filled. Obviously, I can't guarantee anything, but I'm very sure it will get filled. The other side of euro dollar, we do have a very oversold market. Now, obviously, oversold is a bit of it's not really an accurate term to use, but you understand what I'm trying to say. However, if we go ahead and have a look at some of the data going on with euro dollar, if we look at COT data, what we've got is the euro has had a decrease in long contracts by 5,698. We've had an increase in short contracts. The net change is bearish, almost a negative 5%. The USD actually isn't very notable, really. It's relatively flat, slight decrease in long, slight increase in shorts, but again, very basic or very uninspiring, if you will. We've got Let me find major currency pairs only. Where is euro dollar? Am I blind? Hold on, let me just search for it here. Huh. I don't know. I'm sure someone at A1 is watching this, screaming at me how to find euro dollar. But anyway, the point is, retail is very, very long on euro dollar at the moment. So it's a couple of factors there for the short term that are worth relying on. But yeah, after these positions, I think I'll be done for a little while. I still think parity is in view. It's just euro dollar's in a tricky spot. I wouldn't be surprised if we get a daily pullback, which obviously I don't want to be caught in. Can you tell me how can I trade gold on the basic of news? It's a tricky one because what you'd be doing is event trading. So you'd need obviously the catalyst to get into the market. So really what you'd want to do is wait for something. You'd have to be very, very aware of what's going on in the markets and what's going on in the world. So for example, you would need something like Bloomberg or Reuters, some sort of news source to say, okay, the ceasefire talks in the Middle East, get short gold, because obviously we'll see an outflow of risk off capital there. If you're meaning more like how to trade NFP and CPI and things, that's more of just a gamble. I wouldn't even attempt to do that, just from my opinion. But yeah, if you're looking at a geopolitical or a macro outlook, it's kind of hard to do. It's definitely possible, obviously, but you need to be very understanding and very aware, because things can change in a matter of seconds. I mean, look at gold. It was running really, really well to the upside and then very quickly flipped bearish. Is Edgefinder and Edgefinder Pro same thing? Yes, Edgefinder is sort of the... I think Edgefinder Pro has more features than the standard Edgefinder, as far as I'm aware. My algo trading has helped me open a long on Euro USD trade. It is in profit right now. Should I overwrite it and close it? Jacob, why? Just because I'm short doesn't mean you have to be short. If your algo has been tested and it's profitable, leave it. Who am I to sway your opinions? I filtered by minor. My bad. I'm waiting on DXY gap, lol, but I think Euro Pound will go a lot higher. Possibly. Let's have a look at Euro Pound actually, because I was looking to go short on that one here. Luckily not in that. Oh, right, actually that was an old position I had, I think. But yeah, Euro Pound still has room to go to the downside, in my opinion. I think we're still in a seller's market. The issue is it's a horrible asset to trade, or it's a horrible pair to trade. The price action is very, very unclear. It can be very choppy. We can get higher lows, higher highs, all sorts of stuff within the same trend. It's just not, it's not an ideal asset, in my opinion. I just realized half my head's off the screen. There we go. But yeah, it's kind of an ugly one. So I'll only ever take a trade on Euro Pound if there's a very, very clear setup, which there very rarely is. What do you think? Euro New Zealand? Let's see. So again, it's not really anything something I would trade. I would look to go short. The only thing that puts me off right now is the reaction here at this 200 moving average on the daily. We've had a really strong push to the downside and a very fast rejection back up, followed by a strong bullish daily candle. However, the euro strength that we're seeing today, I don't really see that as being sustainable. I think we're having a Monday push. The Mondays are always a bit, they're never the best trading days, in my opinion. So it's just the way the markets are going. I don't think this is going to last. So more downside movement I would expect. But again, it's not really a pair that I'm too familiar with. So don't take my word for it. Always do your own research. S&P 500. Yeah, I think we will at least come and close this gap. I think that's kind of the minimum to expect from this at the moment. Once we filled that gap, I wouldn't be too upset. Actually, this might set up quite nicely. This 50% level lines up perfectly with this market gap. So we could look for something like this, which actually I might do. Let's see, does this a little bit, maybe it's tempting, but not yet. So I'll put it on the watch list and we'll see. What's your positions, James? I've got I've got euro dollar, I've got euro CAD, and I'm also in Swiss yen short. Australian dollar, New Zealand. I'll take a look in a second. Like ACO, to my technical analysis, my bias was bullish for a week, and in Forex Factory, there was no major news in USA today, so I don't understand why gold go down. Well, gold's gone down because we've had ceasefire talks in the Middle East. So if we look at what gold has done this year, this has been driven by multiple factors. We've had I don't really need a brush, but we've had essentially a whole G10 class or whole G10 group of interest rate cuts. So we had Bank of England, European Central Bank, the Fed, the S&B, Swiss National Bank, all cutting rates this year, which obviously helped gold. We've had tensions in Russia, Ukraine. We've had tensions in the Middle East. We've had elections in the US, all very, very positive for gold. Now, if we look at what's going on with the same situations now, we've got ceasefire talks in the Middle East. Russia, Ukraine is still a factor that's bullish for gold. We've got a potential for the Fed to hold rates in December. We've had the elections. So what's left? Just Russia, Ukraine, really. So yeah, just be cautious on gold. There is no bullish factors, in my opinion, right now, other than the general gold market being a sort of an investment. There's nothing in terms of a market catalyst or a global catalyst. NAS 100 closing gap. Could you look into it? How are you so comfortable trading multiple currencies? Because I do research. So look here. I've got Australian dollar, Canadian dollar, Swiss, euro, pound, yen, New Zealand dollar, US dollar, emerging markets, energies, metals, agriculture, US equities. I've got global. I've got all my data here. I've got the Edge Finder. I'm very, very diverse in terms of currencies. The only thing is, though, that I stick to G10 currencies typically. So pound, dollar, euro, etc. But because that's basically all I trade, I'm very familiar with them and I know what to look for. I'm not a believer in the whole one strategy, one time frame, one pair thing. I think that's a load of rubbish. I think that's a very easy way to limit your income and limit your skills. As humans, we are very, very good at starting to recognize patterns and understand context and things. And that's, part of being a human, the human brain. So I've been doing this for a very long time, multiple years, and that's given me the ability to understand when momentum's slowing down, when it's increasing, when my setup's available, all that type of thing. Anyway, NAS 100. It is closing the gap. Has it fully closed? Yes, it has. Now, probably won't take NAS, but it does look quite good. Seeing quite a nice rejection so far. So let's have a look. What could we do? Put my stop there. Lower the take profit just to be a sort of a previous structure, so somewhere around here. I don't mind this, but it's just not for me because there's no factors in terms of the economics, fundamentals, etc. There's nothing here for me, but from a technical perspective, I quite like it. So if you're just a technical trader, maybe have a look at that one. So Australian dollar, New Zealand, I forgot to go for that one, so we'll have a look. This is actually, hold on, let me see. It's not bullish on the Edge Finder anymore. It was, which is a bit of a shame because I'm still looking to go long on this pair. So we've got very diverging fundamentals, really, for the Australian dollar and the New Zealand dollar. We've got a very clean uptrend. We've got a very nice resistance here. So just waiting for essentially a rejection and a retest of trend line and then continuation to the upside. But you know, it's slow. This is the daily time frame, so we'll see. But overall, I'm still very bullish on this market. What do you think about New Zealand yen shorts? I think it's not a bad idea, especially in this market when we're expecting an intervention from the MOF. New Zealand dollar's not really doing too well. Yeah, it makes sense. Can you say the next move gold? Can you say the next? Sorry, can you say the gold next move swing trade? That was really difficult to read. I don't know if that's just me being stupid. Yeah, absolutely. I can give you what gold's going to do. So gold has a really, really, really good opportunity to either go long or to go short. So that's the two things you could watch for. So I hope that helped. Cedric, good to see you. How you doing? No, but in seriousness, no, I can't tell you what the next big move is in gold. If I could do that, I'd be very, very rich, or a lot richer. I need to check on my euro dollar shorts. They're being a bit of a pain. It's been a struggle to hold this one, actually. What's the probability of gold going up or down, though? I mean, it's 50-50. It either goes up or it goes down, to be quite honest with you. I would say overall, I more lean towards gold being bearish, and that's just because you know, a lot of the bullish factors that were driving gold up this year aren't really the case anymore. Like, you know, elections, Middle Eastern tensions are cooling down, central bank cuts are coming or slowing down at least. So yeah, that's just kind of it, really. You guys give me a good laugh. It's a nice way to start the week. So let's see what else is going on in these markets. We've got a lot of market gaps, indices in US dollar pairs. The thing is, with the markets at the moment, nothing has really changed. I'm still bullish on the dollar, still bearish on the euro, neutral on the yen, waiting for the intervention. The pound is bearish to neutral, but the thing is, today the markets aren't reflecting that. We've got pound weakness, makes sense. We've got relative yen strength. We've got dollar weakness. We've had gaps in the market. Just a bit of a messy day to be trading. How can I get all the global news which affects the gold? Can you tell me a website? Yes, go to www.elitetraders.io. You can give me $50 a month and I will give you all the source. Or if you want to do it for free, you can go to websites such as Reuters, you go FX Street, CME is very good, Trade and Economics, Bloomberg, CNBC, investing.com. There's no shortage of news websites out there. Forex Factory is also good. Yep. Actually, while I'm on that topic, we currently have Black Friday sale on. The links to the website's just been put in the chat, but that sale ends very, very soon. So it's normally $100 a month, but you can get it for $50 a month if you do that ASAP. Never tell me the odds, Han Solo. So anyway, let's get back on topic. We've got actually a correction, well, what looks like a correction in euro pound from the Bollinger Band. We've got dollar CAD and dollar NOK still hovering around the tops, possibly waiting to break out. And euro dollar's having a little pullback today, but again, it's nothing really concerning to me at the moment. CAD Swiss. Oh, this looks like a very nice level to buy from. Let's just see what's said here. CAD likely to track oil prices, fine. Likely to remain firm amidst global tensions or uncertainties. So if we're going long CAD Swiss, might not be a bad idea. We do have a lot of room still to correct up here, and this was back in July when we had the yen intervention that caused the the flash crash in the markets. So if you're optimistic, this might be a trade for you. Stop would need to be quite wide on this one. Take profit back to the pre-intervention level up here. I don't mind it on a technical setup. The problem is, I just, as I said earlier, I don't have a full fundamental reason to buy this pair right now. Bitcoin. We can have a look at Bitcoin, but I'm not a crypto trader. I can give you a technical look though. Looks bullish to me. So I guess you've got two options really with Bitcoin, don't you? You've got either this 100K level coming in. Actually, did we reach 100K? No, we just missed it, didn't we? So 100K isn't just 100K, but it's a huge psychological level. Over the past 10 years, I don't actually know how long Bitcoin's been around, but for at least past 5 years, all I've heard is Bitcoin to 100K, Bitcoin to the moon, and now it's actually done it. It's finally done it. So how many people do you think have been holding Bitcoin for years and are now taking profits 100K? I mean, obviously not all of them, but I'm sure there is a good portion of them doing that. So it wouldn't be a surprise to me if we do see a small pump to the downside on Bitcoin before we go higher. But beyond that, I'm kind of at a loss, to be honest. I'm not sure what really is going on with Bitcoin. Enough room for breathing. Exactly. Always give your stop room to breathe. CAD Swiss, USD Swiss have high level of correlation, might help your directional bias. That's true. That's very true. Thanks, Sean. Yeah, dollar Swiss to the upside, CAD Swiss to the upside might not be bad. Original fundamental analysis will always beat technical 10 times out of 10. And the reason I say that is because fundamentals give you the longer term view. You can have a bias for a much longer time, meaning you can repeat the same trades. Like I've done a euro dollar, essentially just been a seller's market since August. It's been very easy, not really had to do anything other than click sell. Whereas if I was trading technicals, I would have missed a lot of the moves in euro dollar. So what have we got on here? We've got CAD Swiss, Australian dollar Swiss. Oh, actually, hold on. We were just looking at CAD Swiss, weren't we? CAD Swiss. Oh, maybe this has changed things. So if we've got CAD Swiss reading bullish, score of 5, COT's long, retail is flat, seasonality is bearish, trend is bullish, services PMI, retail sales and inflation, all bullish. I might take this trade. Things have changed. The situation has been updated. So what am I going to do here? I am going to wait for the H4 candle to close. We've got 2 hours and 11 minutes until that happens. If we can close within or above this fib level, I'll go into for a buy. If we continue to the downside, then I'll scrap the trade. This is kind of the only valid entry I see at this moment. But yeah, it's doing the job. It's making me happy. Yes, what's going on? I'm still in New Zealand dollar. Well, sorry, I'm not still in New Zealand dollar shorts, but there's still an active signal in Discord. So far, it's very boring since we had the market gap. It's very similar to actually all of the dollar pairs. It's not really done anything other than range. We've already covered gold. Feel free to rewind. Essentially nothing to do on gold. Dollar Swiss, we can have a look. Excuse me. I like it to the upside on a macro basis. I just don't like the technicals right now. And the main reason is just this weekly time frame. So we've got this 200 weekly moving average is just acted as resistance here. This is potentially now a lower high from here. You know, the weekly is quite convincingly bearish at the moment. And with no levels of interest, really, I suppose this is kind of the only one right here at 0.87. Yeah, it just doesn't attract me very much, to be honest. CAD Swiss looks bearish. Doesn't look bearish to me. On which time frame gold to trade? Original, I'm going to give you some tips, and I want you to listen. So the reason you're coming into a live stream asking these questions is because you don't have the information you need, obviously. So what you need to do is go out and get the information, because I can't give you this information, and none of the viewers can. They can't give you the value you need in a live stream. So what you need to do is go and research it properly, go on Google, go on YouTube, and work it out, and make sure you're learning from people that are reputable. Or join a service, whether it's A1 Trading or Elite Traders, don't care. But yeah, you can't go into the markets with the mindset you've got, where you're asking what timeframes to trade or what's the best swing or whatever else it might be, because you're going to blow accounts. Like, for example, which timeframe to trade gold. There isn't a best time frame to trade gold, because you can have different strategies that benefit on different time frames with different situations and different markets conditions. Showing exactly how long this piece of string is a very, very good analogy. So, for example, I could sit here and tell you gold is amazing to trade on the 5-minute time frame. We're going to have a huge move to the upside. Would you then go and buy gold? And if your answer is yes, then you're taking a step wrong somewhere, because it's just not that simple, really. But anyway, lecture over. So EuroCAD not really doing what I wanted, which is a bit unfortunate. Was really expecting a bit more of a move to the downside, especially to, again, fill this gap. I sound like a broken record on a few different topics here. But yeah, this is kind of like the main focus for me at the moment. I can't tell you a free community, unfortunately. I don't know any. Free ones are often not very useful. People like me and Nick and whoever else it may be, we have spent years learning what we know. We spent a lot of money, whether it's in the markets trying to learn, or whether it's on mentors, whatever it may be. So often we charge for that, because it's not, why do we have to make all the mistakes and spend all the money to then give it to you for free? I know that probably sounds quite harsh, but I'm just telling you as it is. I don't like to sit here and blow smoke up people. But yeah, no problem at all. That's what I'm here for. I'm here to help, even though it might sound a bit tough sometimes. It's, that's what it is. Anyway, sorry, we're getting off track again. I think I have a bit of a habit of doing that. So euro dollar pumping back to the downside. It's playing my emotions a little bit here. Euro CAD pushing to the downside slightly. Let's see what gold's doing. Not much. Yeah, okay, cool. So it's a bit of a boring day. There is nothing going on. It's just sideways movement. New Zealand dollar sideways, pound dollar sideways, euro dollar basically sideways. Gold, probably the most interesting market. Huge drop, but what can we do? can't do anything. Jefferson, we've done euro dollar. Essentially, I am heavy short euro dollar. Retail is very long. COT is short. Increase in shorts on euro. There's still no supportive data out of the eurozone. So yeah, and there's quite a few projections now that we're going to see parity. Obviously, I don't really want to start saying that euro dollar is going down to parity. I think it's a little bit early to start trying to say that, but it wouldn't be a shock. Seems like a case of the Monday. Sean, exactly. This is why I hate Mondays. It's like, oh, the market's over tomorrow. Can't wait to gamble my life savings. But then, we get this type of price action where I can't gamble my life savings. What am I supposed to do? What if I master gold? Well, you can master gold. You can master anything. But it takes time and often does take money. If you want to really master something, when I say master something, I don't mean you're a technical artist. I mean, you're a real master of one asset. You understand all of the catalysts, all of the macros, everything to do with gold. You will need, to speed up the learning curve, you will need a mentor. And good mentors, real mentors aren't cheap. They can cost thousands of dollars. Educated gambling. The house isn't out to get you. No, it's not educated gambling. I just throw 100 lots on US 30 in the morning, see what happens. I'm in TP for CHF. Okay, let's have a look. I'll probably wrap up the stream in the next couple of minutes. I'll have a look at Anwin T's position because there's not much else to go over. Pound Swiss. So daily, I'll look at the H4. So your TP is at 1.11207. Your entry is 1.11744. Yeah, I think this is a good trade actually. Very basic, very simple, very easy. Yeah, great stuff. It's textbook really. I guess you're following the momentum. So yeah, great stuff. Following the H4 trend, take profit support. Great stuff. Let's see. Then somebody farts in Israel and old swings hard the other direction. Gold swings hard the other direction. Yeah. What's your thoughts on Euro Yen? I'm more leaning towards a bearish Euro Yen overall. Again, weak Eurozone data, central bank cuts. We've got the possible, very likely intervention with the yen. So, yeah, leads me more towards a bearish outlook there. Anyway, guys, I think I'm going to call it a day here. I hope you all have a great rest of the week. I'm sure I'll be back on at some point this week. Normally am. And I will see you all later.
Attention. The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, pulver alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.